Well, it's time now for your options update. Financials have been outperforming the S&P over the past year. For more on how to play the options market, I'm joined by Alan Knuckman, Senior Market Analyst for Trading Advantage at the CBOE in Chicago. Alan, new earnings season starts in October. We've got nearly 90% of earnings out this season. How are you positioning yourself in financials ahead?
Well, the financials have led the way. We're kind of at the end of the earnings cycle where there's sometimes a bit of a lull, but they kick it off right again here in October. October 8th is when the next quarter starts for earnings numbers, and they usually lead the way because they start off with Wells Fargo, Bank of America, Goldman Sachs, and so forth. So that in the past has been a catalyst to start off the earnings cycle in a nice way.
So why are you so bullish on financials right now? If you, for example, look at how banks have performed over the past 12 months, or there's year to date, up about 25%. That's clearly outpacing the S&P overall, right, which is up about 18%. Why still bullish? You know, what happens if the Fed actually does pull back faster than many expect?
Well, I don't think that's an impact here. The financials have not rallied nearly as much as the market in general. Yes, we're up over the last year. They've led over the last 2 years. But to put it in perspective, since the financial crisis, the XLF is not even to the halfway point of the high to the low. The high was at 38 in 2007. The low in 2009 was 6. So 22 is the halfway point. Right now, the recent highs were at 21. So we're not even to that halfway point. And some bank stocks are still trading at below book value. So there's more upside appreciation. They haven't recovered like the rest of the market has.
Okay, so in terms of market cap, banks are actually creeping back up to levels where they were before the crisis. Where are they in terms of PE ratios?
Well, looking at the PE in general, I'm using the broad market, not getting specific when it comes to banks, but the broad market right now, the historical average since 1989 has been about 19. Our PE is significantly lower than that right now, so just a little bit of a 4% appreciation annually in the PE really sets this market for continuing to move to the upside. Looking at XLF, I like it because it's off 3% off the recent highs. It's been trading between 21 and 15 for the last year, so that puts the midpoint at 18. 18 is also the top of the channel that's been trading in for 2 years, and it did break out. It's been trading between 18 and 10. So 18 is a level I want to lean on. I'm looking at the 18 calls for January, so it gives you the right to be long from 18, below where we are right now. It's in the money, and it's going to cost about $2.55. So right now, it's $2.40 in the money, so the break-even is only about 15 cents higher. So that's not a very high threshold to overcome over the next 5 months. January options have a little bit over 5 months till expiration.
All right. Thanks very much, Alan Knuckman with Trading Advantage on the markets. We'll be back again in 30 minutes. Bloomberg West is up next.